Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Jason Ader, CEO of SpringOwl Asset Management, to discuss the hospitality industry for the remainder of 2021. Jason, it's great to see you again. Welcome back to Trade Talks.
Hi, Jill. How's it going? Good to see you too.
All right. And Jason, tell us about what countries are seeing the strongest rebound from the pandemic.
Well, it looked great a couple months ago. I mean, pretty much every country was seeing a strong rebound. Things starting to go the wrong way. You know, my canary in the coal mine, if you will, has been travel to Macau. You know, one of the biggest gaming markets. It was really the first market to experience COVID, going back to Chinese New Year, February 2020. Things the last couple of weeks have started to go the wrong way there. You know, quarantines being put back in place, regions being prohibited from getting visas. Not a good sign. Also on a day when big Royal Caribbean ship appears to maybe have had some COVID cases spotted. So I'm quite nervous, you know, for the fall season, unfortunately. I think the summer has been amazing. I mean, we've seen green shoots like in Las Vegas. Some of the trends have been above 2019 peak, but we'll see. Sort of the fall does not look great right now as Delta variant spreads.
Jason, what are the most popular types of holidays?
Right now, stay at home, national park. You know, the national parks, if anybody watching has tried to get into one, it's just absolutely impossible. RVs, if you want to get an RV for next summer, you better book it now. That's been just an amazing business. I mean, anything Airbnb also. I mean, it's just, you know, been a windfall, the pandemic for Airbnb's demand. So people in our surveys want to get out, but what's happening now is they're afraid if they're out of the country, they could get stuck. And that's not a great feeling. And probably the one area where there's the most enthusiasm to travel and things look like they're very much under control is the UK and specifically Greater London area. Speaking
of high demand, could staff shortages pose a big threat to the recovery of the hospitality sector around the globe? I mean, anecdotally, we're seeing it locally. Even if you just go to restaurants, sometimes they can't even stay open on Mondays or Tuesdays. They just don't have the personnel. So what are you seeing from a global perspective? I mean, it's a big issue in the U.S., you know, obviously not just for hotels and restaurants, but just getting people to work in all service areas. So, I mean, there are some states, you know, that have started to address, you know, the employment insurance issues, but staffing is a big problem right now, and not just staffing, but the rates associated with bringing back to work are inflationary to labor, which does imply, you know, there's likely to be a cost offset in terms of prices. So it all is part of this inflationary spiral that we're seeing, upward inflationary spiral, which may or may not be transient. Here's an interesting question. How long do you think it could take for the hospitality industry to bounce back to pre-pandemic levels of profitability? Because before these variants started to make a threat, the demand is certainly there. I mean, I've been away a number of times over the summer, and it seems to me as packed as it was pre-pandemic. The leisure demand is absolutely amazing. Everybody wants to get out and travel. It's a tale of two markets. You know, Orlando, obviously, Las Vegas. You know, the Caribbean. Just anywhere, any place where leisure travel exists, we're going to see a move, I think, past peak levels. The cost of carrying leisure customers is greater. You know, there's just a higher cost of cleaning now and sanitation and processing. You know, and screening for COVID. Cost of labor is also, you know, one area you've also mentioned that's affecting profitability. But the other part of the story is business travel and just the lack thereof, and just the convention meetings bookings for 2022, 2023. I mean, we've all gotten quite good on Zoom. And so there's just a lot of people who can't wait to get out. I went to my first conference and shook hands and exchanged business cards. It was a great feeling, but not everybody is there yet. And also companies now are getting, you know, sort of used to the cost structure of Zoom and Microsoft Teams and are going to be less willing to send groups to conventions and meetings, which had been the case 2019 and prior. So Jason, it almost sounds like the business part of the equation is going to take longer to come back on if it gets back to the levels where it was before, because not only is the cost structure attractive, where perhaps, instead of having monthly meetings at a client's office, do it 11 months and have your annual meeting in person. If we are talking about ESG and the carbon footprint and everyone's concerned about the E in ESG, I mean, you saw the data, you saw the maps, in the middle of March 2020, there was virtually, no pollution in the air because no one was traveling. Right? If there really is an ESG shift in strategy, that could even be a longer term effect than just the pandemic.
Well, that's a very different issue, and people, are changing their diets and changing their lifestyle for that. We'll see how that all plays out. It's certainly the trend, and it's one not to be ignored. And obviously, in the most extreme case of Exxon, very small investors can have a very big impact on the boardroom, making a point about ESG.
All right, Jason, great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me. Take care.